It's Monday, May 17th, 2010. Welcome to freetradingvideos.com. D7 here. The volatility, impressive. I think we were down almost 190 points at one point. I think it was 180 some points. Intraday bouncing back to positive territory. Look at this. Dow in the green, S&P in the green, NASDAQ in the green, impressively. A little laggy here on the Russells, but the VIX dropping about 1%. So everything break even for the day. Futures after hours down just a smidgen. But the thing that I want to share with you is the S&P daily. Look at this ginormous doji. Volatility. Wow, we start off early in the morning, we pop up bullish and we hit our head at the 100-day moving average, and we come down, breaking down below a trend line right here that we have drawn in, and then we drop, and finding a support level at that 1114, almost 1115 area that we had drawn in, and a lows. I mean, you don't get much more perfect than that. So these lines, you can tell they come in really handy, and there's an art to drawing support and resistance lines, and it's something that you have to master, you have to become good at, and you need to be educated on that. But anyway, we start with a lower high, lower low, stay above the 200-day moving average, and we doji out the end of the day. This is more of a bullish doji because there's two reasons. One is at the bottom of a leg, so we have that. That's a reversal pattern. And the other thing is we had the open and the close higher on the doji with a longer lower shadow. The longer lower shadow, for it to reverse back, shows bullish sentiment. On the MACD down here, we do have a negative tick. However, it's a small little guy, and it wouldn't take much for it to go positive. If we get a higher high, that means we got to go higher than today, and that would put us higher than the 100-day moving average, and that means we need to get higher than 1142. If we can get a close above 1142 at that point, we will have, let me take this line right here, and I'm going to move this down to this swing, but then I'm going to take this and raise it up right there, and then drop that again ever so slightly. So if we pop up, that will be a resistance area. This 1157 to 1160 area is going to be a major resistance point. We can get there in one swoop, one day, boom. Then the question is, what will happen? We could consolidate. If we do pop up, I will be inclined at that moment to have a line doing this. So we will have a pinching pattern or a triangle type pattern in the making. And if we get this, this could go up or down, and because these things can pop either direction. So that's what I'm looking for. I think tomorrow has a better chance of being bullish than bearish, and I think we will make a higher high. But at this point, since we're choppy going sideways here, I'm going to maintain myself as being hedged. Being hedged in the market is a fantastic way for capital preservation. Hedging is very smart and a shrewd way to manage your own capital. So there you have it. Thanks for being a part of Free Trading Videos, and thank you for sharing this with your other trading colleagues. We are appreciative of that.